Alright, I think that we're a little overdue for a complete portfolio reveal and update, so today I'll be going over every single one of my holdings in my current long-term dividend growth portfolio, sharing my investing thesis on them, whether I plan to add or sell in the future, and so much more. And a lot of channels on finance YouTube really don't show their entire portfolio or only show you the good stuff in their portfolio. Jeremy. But ever since I started this channel, I've always been transparent and truthful with you guys, and that's going to continue going forward. And if you appreciate that fact, all I ask for in return is that you smash the like button, subscribe if you haven't already. If you want to go the extra mile though, check out the Do Dividend Stocks Not Drugs merchandise, the best looking merchandise for any dividend investor. Thank you, and of course, roll the intro.
Hello, I like money.
For today's video, I'll be using DividendData.com, which is a software that I personally use to track my portfolio at the moment. I also have an affiliate link on DividendData.com, and it's very upsetting to see that 90 of you guys have clicked on that link, and not one of you have actually gone through with buying DividendData.com. If you didn't know, essentially I get a really big portion of the purchase if you do go through buying it. It's a great investment not only in yourself, but it also helps support your favorite transparent creator. Currently my portfolio value is sitting at $22,400. Out of that money, $1,300 of that is cash. That's just sitting there pretty much collecting interest for now until I really see a good opportunity or hopefully a market crash happens. If you're new to the channel and are not familiar with my investing strategy, it's really simple. Just buy really good companies that produce money and hold on to them for a long time. Eventually, I found that's the best way to grow total returns and get dividend income in the process. When I began investing, I would really just invest for dividend income and this future stream of cash flows that I'd be getting from those businesses. But I've realized in the process that when you're chasing dividend income, there's a lot left to be had on the table, and that over a long-term time horizon, dividend growth and growth options are much better suited for my investing strategy. Right now, my portfolio is up 12% all time. Now, this is highly lower where it could possibly be. I started in 2020 and invested a lot of my money. And just to be transparent, I'll show you guys this from November 17th. I've technically been underperforming the S&P 500. Now, I don't take too much heart into this. I don't focus on like one-day returns like Joseph Carlson comparing myself to the S&P 500. I think that's really stupid. And overall, with my current investing strategy, I think I'll keep in line and outperform the S&P 500 over a long-term time horizon. Also, one could make the argument that everything in the S&P 500 is really overvalued right now and we're in a big bubble, but I think that's really stupid to focus on short-term price fluctuations. Also, another reason for the underperformance in my opinion, I did really over diversify my portfolio and had a lot of positions that were just not needed. Also, a lot more safe, secure holdings that really did sacrifice return for me. I'm selling out of a lot of those holdings right now, and we're just kind of holding me back. It's kind of holding around like a 20-pound bag. It's going to slow me down definitely, and I think over the long term there's a lot better options for me. But to start off in the portfolio, my current biggest holding is Microsoft stock ticker MSFT. And it's also one of the largest gainers in my portfolio, currently up 68.7%. Right now, Microsoft is my biggest holding because I loaded up in the $230 and $240 range. I was buying Microsoft for its cloud-based subscription business and robust gaming segment, and honestly, I didn't invest for the AI part of it. Unfortunately, that's caused the price of Microsoft stock to jump up above $400, and it's really above my cost per share. If I were to add ever more Microsoft into my portfolio, it would probably have to dip down back to $300 around there. It would make sense for me to continue adding. But right now, Microsoft's my largest holding in the portfolio, and I have $2,464 worth of Microsoft. My next largest holding is SCHD, the Dividend ETF. Now, a lot of people give me shit for this. For me in my 20s, I do want to have some dividend income that I could use at disposable reasons, whether it be vacations, cocaine, or any other things that I may need some money for in my 20s. I just want to have it available. But SHD right now, I'm letting that compound in my portfolio. I think as an investor who's investing for long term and bought an asset to hold for long term, it would be extremely irresponsible for me to sell out of my SHD, especially when I've only held it for a year and a half or 2 years. SHD I also think does offer some solid dividend growth in the process, so with my SHD position right now, I'm just letting that compound. If it were to ever go back probably into the high 60s, I'd probably add a little more. When a bull market, when a lot of stuff is going up and SHD and ETFs like that are lagging behind, it's very easy to call an underperformer or garbage. But I think when a bear market would happen, SHG is going to be looked at a lot more differently. It's kind of a FOMO thing. You really don't want to get caught into it. My third largest holding by market weight is Visa, stock ticker V. I've made so many videos on this channel of why I love Visa so much. It's such an amazing business model. Really low capital intensive business, high margins, high free cash flow, great dividend growth, great buybacks, and it's one of my favorite businesses to invest in, and I put my money where my mouth is. I want to add more Visa into my portfolio. If it were to ever go into the 260s, 250s, I'd probably add more, and if hopefully a market crash happens sometimes, I am putting the house in Visa. My next largest holding is another company they talk about a lot on the channel, which is Starbucks, stock ticker SBUX. If you want to hear me ramble about Starbucks and why I love it so much is about a business, check out my Starbucks playlist. I have about like 15 videos on it, and it's just me rambling about why I love the company so much. But in all seriousness, Starbucks is an amazing business, great brand, pricing power, and as a discretionary business, I view it as a very, very strong company. So Starbucks is the fourth largest holding in my portfolio. The next company is Apple, stock ticker AAPL, and unfortunately I have not been able to add to my Apple position recently, but I am definitely considering adding more soon. I'm liking buying more Apple, probably in the 170s. I think that's a solid price, but I do think it would be worth probably add some more Apple to my portfolio. I really have not bought in a long time. On my Apple position, I am up 36.77%. Berkshire and Warren Buffett were buying the 150s. I think the cash flows only increased from then. I think 160, 170 is probably a fair price for Apple. So if it were to ever go down there, which I could see it happening, definitely Apple's one of those stocks that always falls whenever tech in the market falls. I could see it being a little volatile. I would definitely love to add there. The next company is one that I've been loading up on recently, and it's one of the only stocks in my portfolio that I think is undervalued right now, which is, of course, Vici Properties, stock ticker VICI. Vici owns some of the most unique real estate in the world on the Las Vegas Strip, which is one of the most popular tourist destinations in America. Vegas is a growing town, casinos are always going to make money, and the resorts are always going to make money, but Vici essentially owns a lot of the Las Vegas Strip. They're also diversifying across North America as well. Vici is locked into long-term tenant structures as well, so I don't think there's a lot of volatility you got to worry about there, but I do think with the cash flows that Vici is producing and the growth potentially ahead of it, I think it's a really interesting REIT if you're a dividend growth focused investor. We have been accused of being a Vici cult on the Discord, link in the description, so you're only going to have to join to see if it's true, but I will say a lot of people do own Vici in this community. The next company is none other than the pharma giant AbbVie, which has been trading at all-time highs and has been on a rocket ship recently. I am up 39.75% on my AbbVie position. The last time I bought was at $140 when I dipped a little this summer because of earnings. AbbVie is a very, very strong dividend growth option, but there's a lot of fear over the Humira, but it appears that they're getting over the hump, and the market has realized that. So AbbVie right now is one of those companies in my portfolio I have not been adding to, but for one reason: circle of competency. I've been researching a whole lot recently on AbbVie, and I'm trying to learn more about the business. But the truth is, with pharma, there's so many things going on, and it's one of the hardest businesses to understand. I'm a huge fan and a huge proponent of circle of competency, which is basically just understanding what you're investing in. And I could truthfully say and transparently say, with AbbVie, it's really, really hard to explain. I will say this, though, with AbbVie, execution and cash flows do not lie, and they've done nothing but that over the last 10 years since they spun off from Abbott. With AbbVie in my portfolio, I'm just holding on for right now. I'm not buying and I'm not selling, but I'm definitely trying to research a lot more about the business, so if a potential decline does happen, I'll be ready to buy more. The next company is another one that we talk a lot about in the channel, which is Target, stock ticker TGT. And with Target, believe it or not, everybody, I am about flat on the position. Yes, we've got over the hump, but in all seriousness, though, Target is a company that I've owned for a very, very long time. One of the first ever stocks that I ever bought. I remember buying a whole share of Target at $220 back when I didn't understand anything about valuation. Unfortunately, that's a big reason that I'm really kind of flat on the holding. But if you go back and watch my videos from just a few months ago, you would know that I believed in Target when nobody else did, and I was buying in the 105s and 110s. So far, that's paid off. It was a big bet on my part, really just to bet that the free cash flow would recover at some point and they'd be fine as a business, which I envisioned happening. I will say this, though, with Target, I don't think it's one of the strongest companies in my portfolio, but it was definitely more of a value play at the time, and I secured a really strong dividend yield on cost. Target has also been known to grow their dividend at a pretty solid rate, but it's going to be a little inconsistent, I think, for the foreseeable future. You saw one year they had like a 20-50% hike, and then the next they had like a 1%. So it's a little inconsistent. It's not my favorite thing to see in a business, but at the valuation they were trading at, I thought it was a really good deal. If Target were to go back to the 130s, 120s, 110s, I would definitely load up more. Over the last 5 years as well, Target has outperformed the S&P 500. The next company is one that I have not been able to add to for a while, and I'm really regret that I did not buy when it dipped this fall, which is McDonald's, stock ticker MCD. Mickey D's is currently trading near $300 per share, which is absolutely wild. I bought my first ever share of McDonald's a few years ago just at $190. It's absolutely wild, and I remember people saying it was overvalued back then. That's why you don't listen to people when they talk about valuation and stocks being overvalued when they're great businesses. But if McDonald's were to go back to probably 270, 260, I'd probably eat smaller increments, so I'd buy more. I'd love Dividend as a core holding, but at the right price for sure. There's only limited growth ahead of it. I have made a McDonald's stock analysis. I highly recommend you go check it out. The next company in the portfolio is Realty Not Reality Income, stock ticker O. Realty Income has been under a lot of fire recently. A lot of people are calling it mid, slow growing, and is definitely not performed well over the last 5 years. But I will say this though, it is very easy to pick on a stock when it is down. Matt the dividend profit said it best with Realty Income. Realty Income is just like plain chicken breast. You'll get the protein, you'll get your dividend, it gets the job done, but it's just not the fanciest and best thing in the world. I 100% agree. Realty Income is a position that I'm going to eventually sell out of, probably at the $65, $70 range, if it goes back to fair price. I will say this though, if it goes down to $45 again, those $40 ranges, I will definitely buy more. It is a bit of a medium term holding for me. I do think it will eventually recover, and I think at the $40 range, it's hard to say no with the cash flows like that. Realty Income, obviously there's limited growth ahead of it. I just don't think it's the greatest thing, but right now I'll be paid to wait. The next company in my portfolio is one that I'm currently doing reanalysis on, which is Kroger, stock ticker KR. And the reason that I'm doing reanalysis on it is because I actually think it's one of those other companies that is near undervalued or fair value. There's basically a dark cloud over Kroger right now because of the Albertsons merger and the FTC, that dirty witch Lena Khan, trying to block it. Investors do not like uncertainty, and right now with Kroger there's a lot of uncertainty about the future of their business. Kroger is a very strong dividend growth company, recently just increasing that dividend near 11%. So Kroger, I'm currently doing reanalysis on it, but if the Albertsons merger goes through, I think it's a really strong company. The next company is a railway business, which is Union Pacific, stock ticker UNP. I've held UNP for about a year now, and it's one of those companies that I've really not been able to add to recently because of its hike in stock price, which is unfortunate. But I started my Union Pacific position in the $190, $200 range, and it's climbed up a lot since then, since Jim Vena, the new CEO, is expected to lead some better results for them in the future and better execution. So if Union Pacific were to go down back to probably $230, $220, I'd buy more. The next company is Disney, stock ticker DIS. Disney's actually paying a dividend again now, and I just recently made a Disney stock analysis video which I go really in depth on the company. Highly recommend you go check it out. In all seriousness though, Disney's another company that I'm doing reanalysis on. I really don't know 100% deep down in my heart whether I think their brand is recovered or if they will recover or not. It's a big question mark for me, and there's a lot of uncertainty around their position right now, but I'm currently doing reanalysis on it. The next company is Altria, stock ticker MO. Who doesn't love profiting off of addicted smokers and addicted teenagers to vape? But with Altria right now, it's one of those companies that is definitely a different type of play than a lot of my core holdings in the portfolio. I do believe that they are undervalued right now. When I initially bought Altria, I wanted to keep it as a smaller holding for sure that would produce some decent dividend income. But as Altria has continued to fall, I think I would buy some more if it hit the $39 range. I think that's a price where I'd have to be like, yeah, I gotta buy more. You don't see a lot of companies in my portfolio with dividend yields above like 5 or 6%, but Altria is a 10% dividend yield right now. And the reason that I'm still invested in Altria, and I don't think it's a dividend trap, is that they actually have the cash flows to back it up. Altria actually produces cash flows, and I also think that they have a lot of potential with their non-smokable items. Also, as a business, they have pricing power, and Altria can't intelligently reinvest all of their cash flows right back into the business, so they pay it back in the form of dividends, and they're also doing share buybacks at these low prices, which is a very good thing, and it creates a lot of shareholder value. But Altria, I'm going to allow myself to buy 1 or 2 more shares. I'm going to keep it as a smaller position. It's only about 2% of the portfolio right now, so it's nothing crazy. Speaking of stocks that are down, the next one is not good for me, which is 3M, which is my biggest loser in the portfolio, currently down 40.38%. With 3M, I was straight up stupid. I bought in 2021, listening to other people and just assuming that 3M would be one of those staple stocks that would give me a high dividend yield for the long term. And 3M is the pure example of that nothing is guaranteed in the future. 3M has been slowly increasing their dividend just to keep it alive, and it's a little petty, but it's funny at the same time. With 3M, hopefully I can get out at the right price. I might have to just bite my lips and take the loss on this one. 3M's producing some decent dividend income, and I'm reinvesting those dividends back at these low prices. I'll take it, but it's unfortunate that the stock has gone like this. The next company, though, has made up for it a little bit, which is, of course, Waste Management, stock ticker WM, which unfortunately is one of the smaller positions of the portfolio, too. Waste Management is trading above $200 now, which is absolutely wild. Waste Management was one of the first ever stocks that I bought in my dividend investing journey. I bought it at $110, and it's absolutely wild to see just 4 years later, now it's trading near $200. So Waste Management's one of those companies, unfortunately, right now, that I just can't justify paying that kind of valuation and premium for a company with limited growth and quite being a garbage company. It's an amazing business with strong, sustainable growth at the end of the day, but I can't justify paying that kind of premium for it. So if Waste Management were to go back to the $170, $160 range, I'd probably buy more then. The next company in my portfolio is Coca-Cola stock ticker KO. And this is a company, if you've been watching my channel, you know that I've been trimming out of this position. There's just slow growth. It's very limited growth ahead of it. I think there's a lot better options long term when it comes to total return. But right now, Coke, I have about 5% gains on it. I've been selling out at slight gains, pretty much flat. So it's done its job in my portfolio. It's offered me what I wanted, what I invested in it for. But I don't think long term it will be in the portfolio for much longer. The next company is one share of Berkshire Hathaway, which is the first ever stock that I bought, along with Waste Management and Starbucks. I literally own one share. I bought it $207, and currently it is trading at $405.99. Absolutely insane. I'm up 95% on that investment. The next company is a company that actually has been trading up today, which is Texas Roadhouse, stock ticker TXRH. I regret not buying more Texas Roadhouse when it was in the $90 price range, but right now on my Texas Roadhouse position, I only own 2 shares, so it's nothing crazy. I'm up 34%, so that's a very solid gain. I'll take it. But if it were to go back to maybe 120, 110s, I'd probably buy more. The next holding is one of the best businesses in my portfolio, but I just did not buy enough. And it's, of course, Costco, stock ticker COST. Costco is one of the best businesses in my portfolio. The only bad thing about Costco stock is its valuation, and when I was buying in the 540s and started my position there, I even thought it was overvalued still. But looking at it now near $700, it's absolutely wild to see how it's gone. With Costco right now, I'm up 34% on that position. Unfortunately, once again, haven't really been able to add more at these all-time highs. If we were to ever trade down, go on a bit of a dip, I'd probably buy more. I think it's one of those companies you could buy at any price and have a great return over the long term, but I just can't justify paying it an all-time high like that and a crazy spike. Next, we have a company that's probably not going to be in the portfolio much longer, but they recently just announced a 10% dividend hike, which is, of course, the green, clean utility NextEra Energy. NextEra Energy has been the opposite of what you want in a utility business. So much volatility, unpredictability, and a lot of risk. Just not what you sign up for with a utility. But NextEra Energy has been growing their dividend 10%. They reaffirmed that till 2026. Interesting to see how that will go, but I'm not likely going to be holding on to this position much longer. I'm down 30% on it, down $100 on the investment. I'm probably going to have to just bite my loss here, but I will be doing some further analysis on this to see if there's anything left that I can squeeze out before I potentially exit out. But I don't see myself buying any more at this point. Next, we have S&P Global, which is a newer position in the portfolio, and once again, unfortunately, I was buying at lows, and it's just absolutely gone up in price. Recently, it's declined a little bit after earnings, though, and they had an underwhelming dividend hike of only about 1%. So, interesting to see what's going on there. I'm likely sure that's because of the recent acquisitions that they had. They don't have as much free cash flow to increase that dividend like crazy. It's the responsible thing to do by the business. I'm fine with it. Long term, though, I'm ambitious for their dividend growth. Next, I own TKO, which is the WWE and UFC under one big entertainment business. I'm really ambitious about this holding, and it's a smaller position. I plan to keep it as that, but I will gradually add to it probably if it were ever going to decline. There's scarcity of financial data right now on it because they just recently filed as a public company, and there's not a lot of long-term data. Regardless, though, I think it has incredible brand power and value, and I'm very bullish on both the businesses in TKO. So I will definitely continue to research financially on this company. And lastly, my smallest position is Nike, stock ticker NKE. Nike's a bit of an underrated dividend growth play in my opinion. They've about hiked their dividend 10% annually for the last few years. They've had some pretty strong free cash flow growth. And anytime you have a business that can make a $20 shoe, put their logo on it, and sell it for $250 and have it sell out, that's a business I want to be a part of. So with Nike, if it were to ever go to the $90 range, I will buy more. Here's some more fun data on dividenddata.com. Essentially, here we can see my biggest dividend income payers, some of my biggest sources of dividend income. Right now, Vici is my biggest payer, and I get $78 from them every year. SHD, Altria, Realty Income, AbbVie, and Starbucks are some of my other bigger ones. Alright, and that's my entire dividend portfolio revealed. Hope you guys enjoyed some of the insight on it. I hope you appreciate the transparency as well, which a lot of other finance channels don't do. If you appreciate all that, make sure to smash the like button, subscribe, check out the Do Dividend Stocks Drugs merchandise, and of course, Do Dividend Stocks Drugs. Have a good one.